Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 16th of May. All right, now just looking at the MyFX Trading Hub, just coming up into the sort of the main detailed analysis. Now you'll notice that there's basically no change from yesterday, and this is generally what happens around the geopolitical events when they do dominate. Now there's been no significant change from that geopolitical situation, so the currencies have had their initial move. And this can be seen on the sort of technical outlook. They've had their initial moves, and now they're sitting here waiting for the next information. I was going to say like next bit of direction, but it's going to come from the next bit of information. And this is where, when the geopolitical side goes a little bit quiet, the upcoming events come into play. But now just be aware of this, and if you've gone through the courses, you'll understand this. Geopolitical events generally take out a lot of the fundamentals, right? So I know the fundamental drive here for Euro, Aussie and Kiwi is down, but what we're seeing is where the fundamentals are really coming into play, and that is making a bit of a mess of things. So, and what I mean by that is, if you have a look at the economic numbers or the data from last night, or yesterday I should say, US retail sales figures, like these numbers are really weak, okay? 0.1 versus 0.9, minus 0.2 versus 0.2. I know the revisions were just a fraction higher, but overall, that's dollar weakness, right? And that wasn't really reflected across the markets, because this geopolitical event is so isolated to Australia, New Zealand, the sort of the safe haven trade with the yen. So the yen's sort of just a sidekick. And then you've obviously got the yuan. So dollar yuan, as you can see here, now starting to trade sideways. We will potentially get more information from Trump, and we'll see how that plays out. The dollar index also trading sideways there as well. So that's what we're left with. Now, if I just flip you over to the major pairs, just to have a quick look at that. So this is where it gets a little bit loose. Okay, Aussie is going down, but trading down here, okay, it's a little bit hazardous without a clear directional bit of information. Now, today we do have the Aussie employment numbers. That's going to be pretty big. There are three variables there, so just be aware, jumping straight in when three different numbers are coming out can be very hazardous. Kiwi still drifting lower. We have seen dollar yen drifting lower, traded sideways, and you can just see it breaking down through the cloud now. So maybe in the Asian session, it's a little bit weaker. We'll have to see how that plays out. Euro sideways, sterling, well, negative Brexit news, it's just drifting lower. And we've now got the fundamentals in the UK sort of starting to kick in weak. It's moving a lot because no one's really trading it. There's not a lot of liquidity. Dollar CAD still within that big range, but once again, the CPI data, the initial numbers were pretty much bang on expectations. But you know what? The core numbers that let me just flip you over and show you these. The core numbers that the Bank of Canada use or look at, these numbers were weak. And, once again, you'd expect the dollar CAD to be higher, but, they weren't, right? So that's just another left field. And that's brought on about by these geopolitical situations as they play out. All right, so wrapping this together. All right, so looking at the, where the opportunities are, well, it's going to come down to those same pairs that you should be focusing on. Now, clearly down here now, well, let me just fix that up. The technical side of things, so you've got Aussie and Kiwi have got clear downtrends. Okay, technically they're also heading lower, so fundamentals and technicals, that's the best pair. Now, we do have the Australian employment numbers. This is a very high impacting number. Not the non-farm payrolls is the biggest one of the employment numbers, but any of the employment data, because it has the unemployment figures, the employment change, and like the average earnings, there's three variables, and it can be very massive or volatile. Also, the RBA, if you had been following the central bank information, they highlighted employment as their key thing to watch, right? The employment numbers have been exceptionally strong. Now, I think they will maintain that strength, but if there is weakness, well, then that's going to be a sign that the RBA, they've signaled that that's what they're watching. If employment drops, they're going to start acting, which means lower interest rates. That should see the Aussie come off. So weak numbers, to me, our best chance. If the numbers come out strong, well, to me, the Aussie isn't going up at this point, so I'll be looking to sell back towards 69, sort of 70, 80, even with strong numbers, especially with these core drivers being the geopolitical side of things. Then as you're coming through Europe, well, there's not much there to look at. We do have a couple of peripheral numbers out of the US, the Philly Fed Manufacturing Index and the housing starts. I don't expect a lot from these because the retail sales figures released yesterday were much bigger and they didn't really impact. So what's the chance of these ones? I think Trump is dominating so much that we may not get too much activity. And also the manufacturing sales. Now, this is usually a really high impacting number in Canada. It may be brushed aside there as well. So like the CPI data was. We do actually also have Polos speaking later on. He's going to be talking about the Canadian financial system. So there could be a bit of a left field action there. We'll have to wait and see. And that's pretty much it from the think tank here. It's business as usual. There's good liquidity in the market. Momentum is fading from the initial outburst or announcements following the weekend, Monday, about these trade tariffs. Your key pairs, technically, are the ones with clear direction. So you've got dollar yen, dollar Swiss, sterling, Aussie, and Kiwi. And then match those with the fundamentals, and then you can sort of start to see, well, Aussie and Kiwi are the best pick, and we do have a fundamental driver. It's going to be volatile, but that's the ones to be looking at. All right, guys, that's it from me. It's tricky times with these geopolitical events, so hang in there. If anything, if there's one thing I could suggest, just decrease your trade size. Take the pressure off because there's extra volatility in the market already. All right, guys, have a good trade day. We'll see you in the 247 trade zone. Cheerio.